Hi, and welcome back to ENTP Life. In today's video, I'm going to be talking about renting to Section 8 tenants and giving you the landlord's perspective and a review of the program. Here on ENTP Life, we mostly talk about real estate, business, and any of my other interests. And if these topics interest you and you're not already a subscriber, please make sure that you hit that subscription button, turn your notification bell on so that you get notified when I put out a new video so that you could get educated in any of those topics. While we're on the topic of promoting certain actions, you might as well hit that like button as well. Hitting the like button actually lets YouTube know that people are interested in the content, and it actually helps me get promoted just a little higher, helps my video rank, etc. Also, if you leave comments and questions below, it shows user engagement, so your likes, your shares, your subscriptions are greatly appreciated. I've been involved in real estate since 2006 from the landlord investor perspective. And it wasn't until 2019 that I actually got my first Section 8 tenant. And the reason for that is because anytime that I talk to people about Section 8 or program tenants, they gave me a bunch of horror stories. So in this video, I'm trying to dispel some of that or even confirm some of it and let you know what it's like for real to be a landlord who has a Section 8 tenant. Now, first of all, what is Section 8, right? And what are these voucher programs? Essentially, the government or state and local agencies will have these government programs that are designed for people who are either in financial hardship or living with certain disabilities to be able to get affordable housing, all right? So literally they're giving a select group of people vouchers or pretty much credit to go out there and pay for their rental home. Now, Section 8, as it's commonly referred to, is usually for low-income people, all right? So there's gonna be some sort of income requirement for that tenant to qualify. And that income requirement is a function of, one, that person's income and their family size, right? So what you'll tend to see with a lot of Section 8 tenants is that it's single mothers with 2, 3, or more children, and they may be working kind of like a low-end job. It might be a single mother who's working at Target and has 4 children, okay? Husband died, no insurance policy, something along those lines, and there's no way that on her minimum wage job she could support a household. So she would go to an agency like Section 8, and actually in Orange County, where I have my Section 8 tenant, it's a company called Pathstone. Now, Pathstone administrates the program, but it's Section 8, right? And depending on where you are, they're gonna call it different things. Now, the applicant goes to a company like Pathstone, does a financial review, explains their situation, and they either get placed on a waiting list or they immediately get approved for a voucher. Now, based on their family size, they determine that the applicant requires a voucher for a 2-bedroom home, a 3-bedroom home or apartment, 4-bedroom, 5 bedrooms, and obviously it's related to the family size. They try to put each person in their own bedroom. So if the family size was 4, they're going to be approving them for either 3 or 4 bedroom vouchers. If they needed 5 or 6 bedrooms, it'll be the same way. And the cool thing about that is that they give you a guideline on how much they pay for each voucher type. So if it's a 2-bedroom voucher, let's just say in that area it might be $1,300 a month that they'll pay. For a 3-bedroom, they'll pay $15. For a 4-bedroom, $18. For a 5-bedroom, maybe $2,300, something along those lines. You could go to their website and get a breakdown as to what the voucher expectations are for your region. That way you're able to calculate whether or not the investment and taking on these type of tenants makes sense financially for your rental property. Now, once that tenant's approved and they're given the quote-unquote voucher, they have to go out there and shop for an apartment like everybody else. The only difference is that they disclose that they're on some sort of program, right? And this is where the discrimination starts. So the theory is that the people who are on Section 8 are irresponsible, they have drug problems, they have behavior problems, etc., bad kids, they're gonna mess up your house. You know, any tenant could be that, right? Whether or not their financial source is the government or their working jobs, right? You could get a nightmare tenant in any scenario. So, you know, that's the first myth that needs to be dispelled, is that, you know, these people are gonna be a problem. It's actually not the case. So after they viewed several apartments or homes and they made a decision that they want to move forward with the application, they go through the application process like any other tenant. There may be your typical credit check, background check, etc. But when it's time for you to approve that person, there's one more step that doesn't exist in your free market scenario, which is that the home needs to be inspected by one of these Pathstone or Section 8 specialists. They come into the home to ensure things like safety, okay? They want to make sure that the hot water is working, that the water is working in general, that the heat works, that there's smoke detectors where smoke detectors are supposed to be placed, and that the home is in overall good condition. It's not moldy, there's no leaks in the roof, and you're not taking advantage of these people, right? As I said, they're discriminated against in the first place, so a lot of like crappy landlords who just want to earn, who don't maintain their properties, will accept these voucher tenants because they're not spending money on maintenance, they're not spending money on trying to improve and cater to a discerning audience, and they're being discriminated against, so there's not many options for them. So this inspector is there to protect them from getting abused and taken advantage of. Now, when I first got inspected, I thought it was going to be a big deal, but it really isn't. The inspector comes in and just looks for those things: smoke detectors, heat, hot water is working, everything looks to be good, there's no mold, there's no peeling paint. Once you get through the inspection, you're cleared, okay? Once you're cleared, the tenant gets the approval from the agency, and then you start another set of paperwork, okay? This is the paperwork that's required with the agency in order for you to get paid, right? So you have to give them your banking information, how you want to get paid. You're gonna need to provide them a copy of the lease, and they reveal those things once again to make sure that the tenant is safe, that you are in fact the owner of their home, you're not trying to scam this person or anything like that. Now, in this paperwork, you're also going to decide what day of the month you get paid, right? You might choose to get paid the 1st of the month, the 5th of the month, the 15th of the month, whatever it is. Also, there tends to be a tenant contribution, all right? Now, in my opinion, you can either decide to count on that tenant contribution or not, right? The thing that you're going to want to make sure is good is that at least the percentage or the amount that the government is paying covers all your expenses that you have to cover, such as water and heat, right? And actually, the amount that they pay you is contingent upon what you cover. So if you cover everything, they give you more. So if you cover electricity, water, heat, you get a higher rate. If you're just covering water, you get a lower rate. If you're covering water and heat, you get like this mid-tier rate, okay? So depending on what you're gonna get, you can decide whether or not the voucher portion, not the tenant's portion, but the voucher portion covers all your obligations. That way, if your tenant were to come across hard times, you're not coming across hard times, right? And that's the thing that I saw in the potential for this property that I had, is that, hey, if I rent out to this tenant, Section 8 is gonna cover my nut. They are gonna cover my cash flow. So at the end of the day, I only care about making sure that my obligations are met and the cash flow is just a gravy on top. So I was like, you know what, I'll take a chance with this property because the numbers make sense and it'll give me exposure to the program so that I could see whether or not I want to expand on this, right? So now that it's been about 6 months that I've had this tenant, it's a good time for me to give you some feedback on what I think about the program overall. Number one, I think it's a pretty solid program. A portion of your rent is guaranteed by the government. As long as the government doesn't collapse, you get your payments, all right? If the government collapses, you have a whole nother problem on your hands that, that rent payment is not gonna cover. The local economy is gonna be completely screwed. So you could almost expect with great certainty that that payment is going to come from the government. Another benefit is that your house is safe. You had somebody else inspect it and clear it as being in good condition. And it gives you a baseline if that tenant were to damage your property, where your property was before you lent it. The inspector is going to take photos, and you're going to be able to use those photos as reference for why you're keeping security deposits, what sort of damage was done by the tenant, and they keep records of the tenant's behavior. Another thing is that the tenants are getting the majority of their rent paid, sometimes 90%, even 100% of their rent paid. So they try to do their best to keep on time with their payments, because if they get evicted, they lose the program and they're not accepted back into the program. They want to make sure that they take good care of the property so that there's no cause for you to discharge them. And once again, they lose their voucher. Imagine having 75% of your rent being paid by an external agency and all you had to be was a good tenant. Guess what? Part of your job in life is to be a good tenant. So this myth that these people are out there wrecking your homes is not a reality, okay? The reality is that they're getting the majority of their rent paid. There's a limited amount of vouchers. They know that they're in a good position. So if you give them a good property, which is much better than the other properties in the market, what do you think they're gonna do? They're gonna take care of your property. They're gonna wanna stay there long term so you can have less turnover, and you're getting your money from the government. So if you're a landlord and you're considering renting to Section 8 tenants, I do have some tips for you. The first tip that I have, which is very important, is that you meet and screen the prospective client. Yes, your real estate agent may be bringing you leads, but you want to make sure that there's the right chemistry between you and that person. If you have any doubts as to the quality of these Section 8 tenants, meet with them. Meet with them at their current apartment. See how they keep their home. Is it neat and orderly? Is it damaged? How do they behave? What is the interaction between the parent and the children? What is the interaction, if there's still a couple in place, between the husband and wife? What do they do for work? Figure out how likely they are to continue to make their contribution. Review their financials. Definitely screen that tenant with a little more scrutiny than you would anybody else, right? If you're insecure about the program because of the rumors that you've heard, take your time out to give them an extra look and really screen out for who you want. Like I said, there's not many people who are willing to lend their properties or lease their properties to Section 8 tenants. So of course, there's not many options for them. So if you're open to taking the program, you're gonna get a lot of applicants, which is gonna allow you to be more choosy. And if you have a nice property, you're gonna get even more of them because they're gonna be like, wow, this is much better than my typical crappy apartment that I'm dealing with. I'd like to live there. Once you have more eyes, you can be more discerning and choose the best person possible. So another tip that I have for you is make sure you work with somebody who's working Section 8. Why? They're not gonna be home all day, right? It's gonna produce less wear and tear on their property if they're spending half of their day out of the house, right? Their kids are going to be in school. Their kids are most likely going to be in an after-school program as well because they are working. So there's going to be less bodies at home all day, less wear and tear on the house. You also get assurance that they're going to be able to make their financial contribution if you're able to look at their pay stubs and see that financially they're good on paper because they are working. Another tip that I have for you is to target homes with more bedrooms, all right? And these are real bedrooms, not basement bedrooms, real bedrooms above grade. The more bedrooms, the higher the amount is, and it starts to jump. For example, from a 3-bedroom to a 4-bedroom in Orange County is only like a $200 per month jump. But from 4 bedrooms to 5 bedrooms is a $500 a month jump. So for one extra bedroom, you're earning $500 more, right? So maybe you might want to consider converting a den into a bedroom or a dining room into a bedroom to get your 4-bedroom home to a 5-bedroom home. All right, that way you're gonna squeeze out a little more money. Same thing with 6-bedroom homes. If you're able to figure out how to do it, do it. Now, there's not many 5 and 6-bedroom homes on the market. So someone who's approved for that 5 or 6-bedroom voucher has fewer options. There's fewer properties that they could look at. So if you're one of the better properties that has the bedroom count and you're getting more money, obviously that's the position that you want to be in. And the final recommendation that I give, and I give this as general recommendations to anybody who's investing in real estate, is buy distressed properties, fix them up to a high standard, and lease them. There's a lot of landlords who go out there and think that they could just paint a house and leave junky cabinets in, leave all the original plumbing and electrical in, and think that they could rent it. That house is gonna be a money pit, it's gonna be a nightmare. So if you're buying a distressed property, like a bank REO or a short sale, something like that, where you got the price cheap enough, invest in renovating it and updating the systems, the things that are most likely gonna cause you headaches, especially if you're renting out to Section 8 tenants. Because if your power is not working, your plumbing's not working, there's leaks in the roof, they're gonna complain and they're gonna withhold your payments until you remedy the issue. So to avoid that happening. And that's the same thing is going to happen with regular tenants, right? And regular market rate tenants. If things aren't working, they're going to slow down their rent payments until things are fixed. So if you have an opportunity to renovate your house with a mortgage, with a hard money loan, in advance of leasing it out, so that you know the water heater is replaced anew, that the boiler is up to date and new, the roof has a 30-year lifetime on it, the electrical panel has been updated. You've done all these improvements, you're going to attract better tenants, and you're going to have less headaches. There's going to be less phone calls at 3 a.m. in the morning that the heat stopped working in the middle of the winter. That happens in the middle of the winter, you're going to have to hire an emergency plumber, they're going to kill you on the price, and you might have a $5,000 boiler repair on your hands, and that's going to wipe out your year's profits, right? So think about that in advance. If you could do $50,000 of improvements to your property to ensure that those items are handled, you're going to be saving yourself so much, right? Because that $50,000 is only going to translate to like $200 or $300 more in your monthly payment. And if you bought cheap enough and you bought distressed, you're going to be insulated, right? So rather than buying like an outdated market rate house that you're not going to be able to do improvements on, pick up a property, especially if you're thinking about Section 8, that you could repair, that you could improve to the highest standards, that has that high bedroom count, so you can make the most money possible with the less stress as possible. Now, if you found this video to be informative and you think that there's a landlord out there that should see this, make sure that you share this video, because you're going to be sharing this on your social media and you never know who you're going to attract. You might find somebody who wants to invest with you. You might find somebody who is looking to rent a property that has a Section 8 voucher that you never knew had the voucher, all right? So share these videos, put that energy out there, and you'll see what ends up coming back to you. If you enjoyed this video, please don't forget to like, subscribe, and if you have any questions on anything that I might have missed or any rumors that you want me to clarify for you, please ask your questions and leave your comments in the comment section below. Thank you for joining me here at ENTP Life. I hope you found this video to be valuable. Take care.